A couple of things that arose, actually, I was thinking just as you were talking your way through it, Flip. I mean, first of all, you mentioned how you're talking about these markets, and now we've actually got the first appearance of a designated content market, which is effectively the equivalent of a futures exchange for the uninitiated, essentially regulated by the CFTC. But it's very interesting because hasn't there also been some movement recently where some other prediction markets, more at the sports end of the spectrum, have been trying to get regulation, and they seem to have run into problems?
Yeah, and it's interesting. So Eris applied for sports-related, NFL-related futures contracts to the CFTC. And one of the commissioners, maybe you can correct me if I'm wrong, was possibly Contends, who on his way out, he won't be at the commission very much longer, so maybe felt more free to speak freely, suggested that contracts on things like NFL outcomes are rightfully under the purview of the CFTC, not just to ban them, but that they should have a home under the existing regulatory landscape, which was an interesting bit of a shift, even if, I should say, ErisX doesn't wind up with NFL-connected futures contracts anytime soon. That was an interesting step forward, at least rhetorical step forward for a sitting commissioner, one among five at the CFTC, where the sort of first principle of appropriateness for prospective new contracts on a DCM, as you put it, on a regulated futures exchange in the US, is the economic purpose test before to risk management or hedging and how we see politics as fitting rightfully within that regime. There needs to be sort of a natural two-sided demand, actual hedging demand, not just speculative demand. Obviously, speculators are allowed to and encouraged to and needed for a properly functioning, liquid, robust futures exchange, any kind of financial exchange. But at the core of it, there needs to be that natural inherent demand among the market participants. So the thing you're trading, the risk that you're offsetting or standardizing, needs to impact one group negatively and one group positively, so that the market itself can be an efficient way to reallocate or share that risk. The liquidity then to be enhanced through disinterested speculators. And we've always felt there's a very easy case to make for virtually any policy outcome, political outcome, given that there's usually a winner or a loser when you change the way that the rules are drawn, the rules around commerce. I think it's a credible but much more difficult leap to say the same about sporting events. And you can certainly say, well, okay, the owners of the team, the sponsors of the team and the star players on the team and their own brands, these are multi-million, if not multi-billion-dollar concerns. And so obviously they have a financial interest in various outcomes, everything on down to season ticket holders or the venue of prospective championship game. But it's a much narrower set universe of directly affected natural hedgers. So again, it's not to say that's not a credible argument about the economic purpose of a futures exchange on sporting events or pop culture items, Academy Award winners, things like these. But it's a higher bar to clear. And so it was interesting to see that the CFTC, not that they institutionally were necessarily entertaining it, but again, that one of the commissioners was speaking favorably about the idea. And ultimately, I think it's the way that we'll move as a country and a world in terms of bring more and more of these kinds of products on exchange. Obviously, things that are more directly tied or historically tied to straight up gambling, traditional gambling, are going to be harder because the regulator, the CFTC, doesn't want to become a federal gaming regulator. And so that's part of why sports related futures are going to be among the highest bars. But again, very, very interesting that even rhetorically, they're moving in that direction.
It is interesting. And I mean, obviously, there was also the history a number of years ago where the Hollywood Stock Exchange was trying to get into being a real money prediction market. And as I recall, they were pushed back very hard because the powers that be in Hollywood itself were extremely unhappy about the idea of speculations over the profits of their movie, although it was never actually entirely clear that they weren't just unhappy at the idea that somebody else might be able to make money out of it, because it would seem that actually movies had an incredible speculative series of people who would like to really, truly be risk hedgers in that whole train of movies from start to finish, given the production, the distributors and all the shareholders who've essentially hedged their risk into it.